Welcome to Singapore Business Review TV. We're here today talking with Managing Director Lionel on EZRA, the $250 million company that has big ambitions all around the world and has recently done a bit of a first for Singapore, expanded into Africa. We're going to talk with him about the company, its ambitions, its growth prospects and things it's learned in the last 15 years. Lionel, welcome. You joined EZRA 15 years ago and now it's grown to a company with $250 million in revenue. Can you tell us what's changed over that last 15 years?
When I joined the company, there were about 10 of us. I think today I was just talking in a town hall with our GMs, and globally today we have about 2,500 people. So from the time I joined at least, till today we have grown tremendously in terms of size, geographical locations. So it's changed tremendously in terms of size.
Going forward, what are EZRA's key growth areas and what do you see as your advantage compared to other companies in the marketplace?
EZRA has always been Asian-based. That's where our competitive edge comes from. We have 4 key main businesses. We are in offshore marine support, which provide offshore logistics to all the oil companies, which means we bring the pipe, the mud, the drilling fluids offshore to the rigs when they're drilling. We have our second largest business currently, our production business, which is in FPSOs. So back then when we started, when we have only one FPSO, of course, we didn't have the muscle or the size or the technical expertise, and we slowly grew it over the last 3 years. And one of our major drivers is also to drive that business into us being one of the top players in the Asia-Pac region. We also have our fabrication business, which has a healthy backlog today of approximately close to $200 million. We have 2 yards in Vietnam currently, and that's also extremely profitable business for us. And last but not least, we have our well intervention business. I think the well intervention business and our construction business are the areas that we see the biggest growth areas in. As we develop our new assets currently and begin delivering them in third quarter of this year, that's where our growth for the construction and well intervention business starts as well. In our construction and our well intervention business, I think that's where we see the largest growth coming out from us in the next 24 to 36 months. Over the next 24 to 36 months, we are delivering 5 new assets, and these assets straight away will contribute to our deep water construction and well intervention business. And we hope that this business will take us to the entire globe. That's why we have also established our office in Houston, Africa, as well as all the way to Australia. So these are the key areas that we see our assets driving our growth over the next 36 months.
Recently, EZRA's made a lot of new announcements, especially about business in Africa, which of course is experiencing a rush of investment into commodities. Can you tell us how you see yourselves playing in that market and your experience to date?
We have been in Africa for the last 10 years. We paid tuition fees over the last 10 years to understand what the African market is like. So we finally had the courage to now increase our business activities in Africa. And over the last 12 months, we have won in excess of $130 million worth of contracts from just West Africa alone. And our aspirations obviously is to continue to grow that business, because once we start, we cannot stop. So obviously, we'll be looking for increased growth in the region for the whole of West Africa.
You're spending more time in America, and we understand have just opened a new office in Houston to service the offshore deepwater drilling market. Clearly that's challenged by recent events with BP. What do you see as the short-term and the longer-term outlook for the US market?
We actually sold off our operations in the US Gulf in 2007, and in 2009 saw us reopening our Houston office again for the deepwater operations in construction activity. We see that obviously with the BP incident, there will be some challenges in the near term, but obviously on the longer term for the Gulf of Mexico business, we still see it as a growth business, because that's where a lot of the deep water operations are. Houston also looks after our South American operations. As such, we will be looking to expand our South American footprint going forward as well.
Last October, EZRA raised $100 million for expansion. Can you share with us how you have dispersed that money so far and what your remaining plans are for reinvestment?
We have used almost close to $60 million buying assets that we feel are so-called well priced, or in some sense most of the companies were in some sort of trouble, and we hope that these assets will deliver value to our shareholders over the next couple of years. The balance cash will be used to again do mergers or acquisitions in the subsea construction or even in our marine services arena.
Thank you very much. From Singapore Business Review, thank you.